You probably have a credit card, or you've at least thought about getting one. Because honestly, it feels amazing, right? Swipe the card, get points, spend money, get discounts, rack up miles, take a free flight, collect enough points, get free hotel rooms. It almost feels like the bank is rewarding you for spending money. Some people even start believing credit cards are a kind of financial blessing, or even charity. But here's the uncomfortable truth. Even after giving you all those perks, rewards, flights, and bonuses, the system still makes billions off you. Today, we're breaking down how the credit card system really works, why it's designed the way it is, and how to use it correctly so you never fall into the traps that millions of people get stuck in. How credit cards actually work. We all know what a debit card is. A debit card lets you spend your own money. When you buy something, it pulls cash directly from your bank account. A credit card looks identical, but it works completely differently. Credit, borrowed money. When you use a credit card, you're not spending your money. You're spending the bank's money and agreeing to pay it back later. This is the simplest way to understand it. Debit card, your money, now credit card. Bank's money now, your money later. For example, you have $1,000 in your bank account. You buy a $1,000 phone. If you use a debit card, your balance becomes $0. If you use a credit card, your bank balance stays $1,000. But you now owe the bank $1,000. And that borrowed money comes with a timeline. If you pay it back on time, no interest. If you don't, interest kicks in. That interest is the business model, the credit limit. Every card has a spending limit, $500, $200, $500, sometimes even $20,000 plus. When you use the card responsibly, banks might increase that limit because you've proven you're a safe borrower. But because you're not using physical cash, it's incredibly easy to overspend, and that's where things get dangerous. Before we get to the trap, let's address a common question: the interest-free trap. If I pay on time, it's free, right? Maybe you're thinking, why not just use a credit card, pay everything off every month, and enjoy the points? Isn't that the smartest strategy? Logically, yes. Emotionally, no. Because that's not how most people behave. Most people think they pay their credit card in full every month. But banks know something about human psychology. When you get your monthly statement, the bill shows two numbers: the full balance you owe, the minimum payment, often 3% of the total example. You owe $1,000. Your minimum payment might be $25. Most people choose the $25 because it feels comfortable today. But here's the trap. You pay $25. You avoid a late fee. But the remaining $975 rolls over. Interest begins. Balance grows, stress grows, and the cycle repeats. This is why credit card debt in the US has crossed $1.2 trillion with average interest rates above 20%. Let that sink in. A $1,000 purchase can easily become $2,000, $3,000, or more if you keep rolling your balance. Even if you never fall into the interest trap, banks still win. Why? Because many cards charge annual fees. The fancier the perks, the higher the fees. You pay the fee whether you use the card or not. Rewards are bait. The psychology that makes you spend more. The reward system feels like free money, cashback points, miles, hotel stays, airport lounge, access. It feels like the card is paying you, but the structure is designed for one purpose: to make you spend more than you would have otherwise. Why? Because paying with a credit card doesn't feel like spending real money. You swipe. Nothing leaves your bank account. You feel nothing. You spend more. And the rewards? They're tiny. If you get 2% cash back, that means you spend $1,000, you get $20 back. You spend $5,000, you get $100 back. That's not profit. That's a discount on spending. Points work the same way. Buying a $1,000 phone might give you 3,600 points, but a round-trip flight often needs 15,000, 25,000 points. International flights need much more. You'd need to spend tens of thousands to travel for free. Meanwhile, banks profit from interest. Banks profit from swipe fees. Banks profit from annual fees. Banks profit from increased spending behavior. In fact, stores must pay a processing fee every time you use a card. To cover that cost, many stores slightly raise their prices, meaning even cash users indirectly pay for the perks that credit card users receive. Rewards look free, but someone always pays. And usually, it's you. The credit score system. Your credit score is like your financial trust rating. Banks use it to judge how reliable you are, how risky you are, how likely you are to pay back debt. A high score makes life easier. Lower interest rates, better loan approvals, easier apartment rentals, sometimes even better job opportunities. But the system has a flaw. To get a good score, you need to borrow money. And the easiest way to do that is a credit card. Because of this, many people swipe unnecessarily just to build their score. They feel pressure to borrow because the system is designed in a way where you prove stability by continuously taking on and repaying debt. You don't need to borrow a lot, just regularly. But the system makes it feel like you should borrow more, and that's where many people fall into long-term traps. How to use a credit card the right way. Do wealthy people use credit cards? Absolutely. But they use them strategically, not emotionally. Most people use credit cards to spend more. Rich people use credit cards to benefit more. Here's how. Rule 1. Only spend money you already have. Treat your credit card like a debit card with benefits. Rule 2. Never carry a balance. Always pay the full amount, not the minimum. Rule 3. Don't chase rewards. Rewards should be a side effect, not a goal. Rule 4. Don't borrow unless you can leverage the debt. If you don't understand leverage, don't use debt as a tool. Rule 5. If you're starting out, get a no annual fee card. You don't need flashy perks to build credit. Using a credit card correctly can help you improve your credit score, reduce insurance costs, qualify for lower interest rate loans, track spending more efficiently, earn meaningful perks without falling into debt. Credit cards are not dangerous. Misusing them is. The system is designed for one thing: more spending. Banks know the psychology of money extremely well. That's why they push credit cards aggressively, at malls, on the street, on your phone, through ads at checkout counters. If a company keeps offering you something free, you should always ask, why are they working so hard to push it on me? Because credit cards are not charity. They're not free. Perks. They're not designed for your benefit. They're designed to increase consumer spending. When people spend more, banks profit more. When people carry debt, banks profit even more. When people want higher credit scores, they borrow more. And when people chase points, they spend more. It's a brilliant system, but only if you understand it from the outside. Control the card, or the card controls you. Credit cards can be powerful tools. They can give you better financial flexibility, safer online transactions, travel benefits, cashback, a strong credit score, but only when you control them, not when they control you. Most people fall into the same traps. They spend more than they earn. They carry a balance. They treat rewards as income. They chase points. They pay minimums. They get stuck in interest cycles. The system is designed to profit from the average user. Your job is to not be the average user. Use credit cards intentionally. Use them with discipline. Use them only when they benefit you, not when they tempt you. Because once you understand the psychology behind credit cards, you can finally decide whether you're using the system or the system is using you. If you found this helpful, hit like, share this with a friend, and subscribe to Finance Simplified channel for more smart money tips. Because the best investment you'll ever make is in yourself.